Pankaj, next question to you. Will the global recession affect India in near future? What measures India is taking to control inflation? Given the huge population ahead of China, how many unemployed in India?
Yes, so this is actually three questions. So I'll go one by one.
Yeah.
Now, first on the global recession, yeah, we hear a lot about recession in many parts of the world. So especially in US and Europe. But if you look at data which is coming, especially from US, it seems recession is little far. But even if we have, yes, there will be some impact. There could be a minor impact, but we always have bounced back very sharply from those downturns. So there could be a blip. We might face some means some dampening of growth, maybe in FY24 or maybe some part in FY25. But overall, over the next 5-7 years, 10 years, I think this will be just a blip. So it should not have much impact. On the inflation front, so my view has been a little different. So if you have followed our commentary on the fixed income side, our opinion is that inflation that we saw over the last 2 years, that was mainly driven by one of price shocks. It was not inflation. So inflation is something where your prices are growing at a certain rate for a sustainable period. Now, what we saw in the last 2-3 years, there were supply chain disruption because many of the economies were not operating at their full potential. Trade activity was kind of hampered. And also then we had this war shock, the Russian shock, where commodity prices spiked up and suddenly we saw crude or petrol, diesel prices, etc., everything moving higher. So a mix of these two actually kind of led to higher inflation. And now we are seeing that coming down. So our expectation is this year probably will have CPI inflation below 5%. So for us, this is a very manageable level. We have lived with that inflation. And if you see even our expectation, long-term expectation, we kind of put our expectation for inflation closer to 5%. So I think there's not a cause of worry for now. And we don't see any structural sign of inflation rising significantly from the tolerable levels, I'll say. So I think inflation, we are not doing anything, but yes, RBI has reversed the monetary policy. They gone to 4% on the repo rate during COVID crisis, and they pumped in a lot of liquidity to the extent that at one time banking system was sitting on surplus of around 12 lakh crores. So they reversed those accommodative measures. Now they are back to 6.5% repo rate. And now if you look back in history, we are very close to the average repo rate over the last 20 years. So they kind of normalized the policy. And also liquidity front, they came closer to normal, slightly in positive. We still have some surplus lying with the banking system. And probably that will continue for some time, but not like 12 lakh crores what we had in 2021. So I don't see any significant jump in interest rate or any drastic measure to control inflation at this juncture. And third question, sorry, I forgot the third question. Can you come up again?
Yeah. So given the huge population ahead of China, how many unemployed?
So unemployed. Yeah, so employment has been a problem in India. So especially in the last 5-7 years. Now, I have to just, there's a lot of discussion about employment. There are two sides which kind of always debate whether there is unemployment or no unemployment. Now, we fall in the camp where we see that unemployment increase, especially after 2016-17, and that phase continued till now. Now, why it happened? First, let's look at that part. So in my presentation in the first slide, I mentioned during 2016-17, we had multiple shocks. And if you look at the nature of those shocks, it has something peculiar. So one, the demonetization. So your cash has gone out of system. right? Even for a temporary phase, cash was not available. And India is a big informal economy. We have almost 85-90% of our economy is informal, unorganized sector, which mostly deals in cash. Again, we had a GST coming in 2017, which was kind of so GST over the long run could have a very positive impact. Formalization over the long run has a very positive impact, but formalizing the economy with a shock, very rapid formalization can have a negative or devastating impact for any economy. And we have seen that in different countries as well, where they had a similar process at some time in past. So mostly when these things happen, you see businesses moving from unorganized sector to more formal organized sector, where big companies get bigger, but smaller are crushed. And now the efficiency level or the labor intensity for big companies is far better than the unorganized smaller companies. So they can produce same level of units with a much lower labor deployment than what unorganized sector was doing. And that created a lot of unemployment in the economy. And that phase continued till now. We are almost 5-7 years. And you look at other shocks as well, be it the NBFC crisis after IL&FS, because who were borrowing from these NBFCs, especially the smaller NBFCs, the unorganized sector, which were not getting funding from scheduled commercial banks. Or during the COVID, means these are the guys who have to go to work in their factories and go there physically. So they're not have the work from home facility. So all these shocks had a disproportionate impact on the unorganized sector, and that is 85% of our total employment pool. So we saw that declining, total jobs declining, and now we are still sitting with that problem, though now we see some improvement, and recent data was really encouraging. Means we see that in the unemployment number, which has risen, and that gives a negative perception. But why it has risen? Because labor force participation has increased. Now we see more people coming back into the labor force who had left the labor force earlier. So that's a positive sign. That's very encouraging. Also, we are seeing some activity improvement in the informal sector. We are seeing pick up in the construction sector, which is a very large employer for low-skilled, semi-skilled laborers. So all those things give us some hope, some positivity that at the broader level, employment situation is improving. But yes, we are far from where we should be. And even with maybe 6.57% growth, we won't be able to address that employment challenge properly. We need to grow at an even faster pace to have a proper employment for our young population. Yeah.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.